Hello, my dear friends. Today, our topic is very simple but an interesting one: Saudi exchange traded index derivatives. Question: how do you trade a Saudi index future contract? Very simple. A Saudi exchange traded index derivative, or the Saudi index future contract, is a contract between a buyer and a seller at a price agreed upon today to be settled at a future price in the future. The buyer can close his open position before the contract actually expires at any time in the future. These contracts are traded on the electronic exchange made by our dear Tadawul. And the question here is, the contract that we are going to be talking about today is the index futures contract, meaning that the underlying asset of that contract is the index itself, which is the MT30. So the question here is, how much one contract costs to buy or sell. The current level of the MT30, let's say today, is 1400 points. The index contract multiplier for the SF30 is 100 riyals. The index contract price would be calculated by the index contract multiplier multiplied by the index level. So it's 100 riyals, which we talked about. The contract index multiplier is 100 riyals per contract, multiplied by the level of the index that you bought the contract at. It's going to cost you 140,000 riyals per contract. But there is a twist here. You're not asked to pay 140,000 riyals before the expiry. They ask you to put up the initial margin, which is 10%, meaning 14,000 riyals will cost you to trade a contract before the expiry date. So the question here comes is, how much profit do I make when I have bought the contract? So when you bought the contract, the MT30, the index level was 1400 points, meaning that the contract costed you 140,000. You paid up 14,000, 10% of the contract value. Now the index has moved from 1400 points to 1500 points. This is where the question comes. A difference of 50 plus points have happened. So the index contract price that you will be calculated just the way we calculated earlier, the contract multiplier times the index level. So it's 100 riyals per contract multiplier multiplied by the index level, which is 1,450. It's your contract is worth now 145,000 riyals per contract. So you're making around 5,000 riyals. Okay. Another question comes. So why would I need to use index futures contract? Very simple question. The contract, when you bought the contract, it costed you 140,000 riyals, out of which you only paid 14,000, 10% your initial margin. Now market has moved up to 1450 points, meaning that you are positive in the green of 5,000 riyals profit. Your profit is 5,000 riyals, and over your initial investment, your rate of return is 35% on the investment that you paid for each contract. That is among one of the reasons why a person would trade a contract, an index futures contract. Other reasons why you would buy it is obviously to take advantage of the market at a cheaper level. Number one, number two, you can use it as a hedging technique to hedge your portfolio. So there are many different reasons, but a higher rate of return on your investment, for me as a personal point of view, I think that's a very additional added value to trading index future contracts. Thank you. I hope I was able to help you guys in terms of how to trade Saudi index future contracts. And this has been your friend Mohammed Al Quraishi. And please don't forget to subscribe and help me build Saudi financial talent. Thank you. Cheers. Bye bye. Assalamu alaikum. Allah wabarakatuh.